In this video, I explain in detail how stock picking strategies work. This knowledge will give you the necessary knowledge to build such a strategy yourself. First, let's explain the basic concept of what a stock index is. The main representative is usually the S&P 500, which is an index of the 500 largest US companies. There are companies like Apple, Facebook, Microsoft, and others. For us, it is essential that we can independently select any stock from this basket and trade it. In stock picking, strategies do not trade just one instrument such as gold or Euro USD. Strategies always trade different stocks from a particular index or set of stocks. After we have explained what a stock index is, we can move on to explain the principle of how stock picking strategies work. In the first step, we search the index for all stocks that meet our entry condition. In this sample case, we will select all stocks that have fallen more than 3% over yesterday. We can also use a candle formation or indicator as an input condition. Let your imagination run wild. In this particular case that we are showing now, we are assuming that the stock is rising most of the time. It's called long bias. Therefore, there is a high probability that after a stock falls rapidly, it will make up the loss and rise again the next day. This phenomenon is specific to stocks. For example, it is not found in Forex. In the next step, we rank the stocks that have met the condition according to which one has fallen by how much. First, we choose the TMO stock, which has fallen by 6%. This is followed by DE and the others. In the third step, we open trades for the winning stocks. Part of the rules of any stock picking strategy is how many trades we can open at a time. It can be 3, 4, or 5 trades per day, for example. In our case, we selected 5 stocks and allocated 20% of our trading account to each of them. And now what? Well, let's see it in practice. I cloned this breakout strategy, which will serve perfectly. We have 3 tabs here because we can go long, short, and then there's the position score tab. In the long tab, we define the entry conditions, the order type, and the way we exit the trade. In this case, it's at a profit target of 20% and after 20 bars. We can also use end of day or a specific condition of our choice. The next important thing is to choose when we enter and exit. In this particular case, we enter and exit at what is called the on-bar close, which is the closing time of the stock market. We have money management set to a fixed amount of $10,000 for testing purposes, and at this point, we are ready to run the backtest.